programs to the public, such as investment and stock trading courses. Financial professionals,
原来
providing up-to-date training
没有用的啦
courses
你，
for the
你是
finance
讲话你跟我 sales
professionals,
talk 没有用的，
keeping them well
有时候你
informed
讲
with
话跟我
compliance,
sales talk，
regulatory requirements, financial products, and best
另外你就要
practices.
跟阿红跟那个
Financial
把他
technology.
告
We
诉他们
develop
班的
and
话必须要
provide
扣
information technology solutions and management services curated specifically for our clients' needs. Cybersecurity and data. We provide data, information, analytics, and cybersecurity services to your business, keeping your
你啊
data
你会
safe.
因为他也是
Since our inception, we have trained thousands of participants among the investing public, financial professionals, hundreds of B2B clients, and have continued to forge strong business partners. To find out more about what we do and
下
how
一页还
we
跑
can help
下一
you,
页，
contact us
那下一页
today.
我看副卷啊，
Cybercode is a leading financial training provider and a leading developer of information technology solutions and management services.
Hello, hi, my name is Abby. I just finished the MIW course. And what I can say that before, prior to this course, I thought my fundamental analysis was very good and I thought my technical was fairly okay. But after this course with Jay, he really highlighted a lot of basic things and also certain in-depth things that was related to the current industry. And I can say that it was something that is really enlightening and it was a really good course that I would recommend to everyone who wants to instill more knowledge on technical and also fundamental analysis. And yes, definitely I will recommend it to most of my friends who are in this industry and whoever who is interested in stock analytics. Thank you.
The Institute of Banking and Finance, or IBF, was established to foster and develop the professional competencies of the financial sector. IBF is dedicated to empowering practitioners with capabilities to support the growth of the Asian financial industry. It is the national accreditation and certification agency for financial sector competency. Developed by the industry for the industry, IBF Standards is a set of competency standards benchmarked to international best practices. IBF's vision is to be the Asian standard of excellence for practitioners in finance. IBF Standards covers 13 industry segments and offers a wide range of development roadmaps. IBF Standards offers accredited programs to guide a financial practitioner from licensing examinations to professional certification. IBF Standards certifies financial practitioners at 3 levels. An IBF qualified individual is one who is equipped with a broad base of capabilities and foundational competencies to undertake new roles. An IBF advanced individual is one who has acquired applied knowledge and complex analytical skills for specialists or leadership functions. An IBF fellow is an industry veteran who has demonstrated professional mastery and exemplifies thought leadership and commitment to industry. The IBF certification mark, a set of parallel elevation bars, symbolizes the close partnership between IBF and the industry. IBF certification is therefore an industry-endorsed mark of quality that recognizes individuals who exhibit professional excellence, integrity, and commitment to the industry. Be part of the IBF community of certified financial practitioners. Participate in continuing professional development programs. Avail yourself to learning resources to plan your career. There are also opportunities for mentoring and networking. IBF, the Asian standard of excellence for practitioners in finance.
Hi, good day. My name is Kotong and I just attended MIW. Okay, the key things I've taken away actually is two things. One is a framework to actually use fundamental analysis and technical analysis and how to synergize them together such that you can actually look for value stocks and for you actually to catch on the opportunities for the shares actually trending higher or lower. And the second thing I learned is not a lot of other courses in all those other paid courses will actually offer you is actually position sizing, because in this case most of the investors will try to jump into a position right away after a jump out with their entire position out in this case. What actually taught us is actually to do it in sizes such that you can actually catch on your opportunities and as well as allowing another portion of your investment to actually to write onto the trend itself. And this can actually eliminate the psychological biases that most investors will actually fall onto it. So therefore, based on these two key learning lessons, I would highly recommend you to actually take in MI.U. Thank you.
So when I came upon this topic on core behavioral finance, I started to realize that the crux of a successful investor or trader is not about selecting stock. It's about managing the portfolio of stocks they own. We manage the risk, not only just managing the risk, we also manage the psychology of ourselves. The only best way to service to a client is really through a standard process, guidelines, and also to understand what the client really needs and automate and update. And this will generally help clients not only to provide the best service for clients, but also to help clients to gain wisdom, knowledge, and getting the best investment decision for themselves. So that this is what I do normally. The perfect strategy to me is a unique strategy that fits to the person's objective and wants.
During this class, Jay actually shared a lot of his personal experience and made certain concepts very clear to me. Like what is a trend, what is a momentum, causes actually help me to understand the technical analysis and also the fundamental side.
He's able to convey very effectively the substance and the knowledge. I find him very pragmatic and his approach is very prudent.
Join my course and learn how to make your investment work for you today.
Investment in artificial intelligence is booming worldwide. Driven by the release of ChatGPT last November, the surge in AI investment has increased the demand for data centers and real estate investment trusts that specialize in these facilities. Singapore REITs with substantial data center assets and exposure include Keppel DC REITs, Digital Core REITs, and Capitaland Ascendas REITs. KDC REITs manages 3.7 billion Singapore dollars in assets, which include 23 data centers across 9 countries as of June 30th, 2023. In its H1 2023 financial results, KDC REITs saw its gross revenue rise 3.6% YOY to 140.5 million Singapore dollars, and net property income increased 3.3% YOY to 127.4 million Singapore dollars. DC REITs meanwhile has a portfolio of 11 data centers located in key metros in the US, Canada, and Germany, with assets under management of $1.6 billion as of June 30th, 2023. Capitaland Ascendas REITs also completed the acquisition of its 5th data center in the UK for 200 million Singapore dollars, boosting its data center investments in the nation by 54% to 569.8 million Singapore dollars. This would increase Capitaland Ascendas REIT's total data center portfolio by 15% to be valued at 1.5 billion Singapore dollars in terms of assets under management. Scan or click link in description to learn more or join SGX Invest on Telegram for the latest news update. Please note this is a general commentary of historical performance and not necessarily indicative of future performance. Check out our investment courses that are up to 70% subsidized at cyberquote.com/sg or contact us at support@cyberquote.com.sg.
Hi, a very good evening, ladies and gentlemen. Thank you for joining in for this evening webinar session. Why do share prices go up and down? Question mark by our keynote speaker, Jay Chow, Wealth Manager from Philips Security, also the IBF accredited trainer, and also the associate trainer with CyberCode. My name is Andy. I'm come from CyberCode here. Thank you very much for joining in for today's session. For those who joined from Facebook Live as well, thank you very much. Now, of course, today we're talking about this topic. Why do share prices go up and down? Of course, prior to that, do allow me to do a short introduction of company as well, the keynote speaker today. Now, indeed, for those who are following through CyberCode for years, for seminars, to get to know that our business, providing a financial business to the retail individual for more than, I think, close to 27 years, starting from 1996. And of course, for the corporate level, we're also providing those IT services, financial, CPT courses to the corporate financial industry as well. Now, indeed, for the last 3 years, when this COVID pandemic hit whole worldwide, Now, so do Singapore also affected. Now, the good piece of news is that we do have IBF. The video you just played earlier on. In short, IBF, the Forward Institute Banking and Finance, care of by the MAS, who are providing support to the local citizen and permanent resident to upskill this level. So I think during the last 3 years, during this COVID pandemic time, so IBF provide a lot of accredited courses. So in fact, one of the course called Making Investment Work course, in short IBF, in short MIW, directly teach by our wealth manager chia, it will be shared towards the end of session. So if you're joining as a citizen or permanent resident, you can get up to 70% of the cost subsidy, which means 70% of the cost fee will be subsidized by the IBF, and then the remaining 30% you do have your SkillsFuture credit. You can even use your SkillsFuture credit to fund for it, right? Now, also, the other thing to just share about is, like, of course, a lot of Singaporeans, basically, they still have not started to use the SkillsFuture credit, so it's time for you to use it to participate for these financial courses, right? Now, indeed, Jay also teaching another different 2-hour workshop, which is, I think, spread among 3 different unique course titles. It will be shared towards the end of the session, so please stay tuned to the end of the session. Now, indeed, earlier on, we did so-called flash also the slide as well. Now, next month, in fact, November 21st, Jay also going to be conduct, yes, thanks Jay, for this live in-person preview. Now, very interestingly, very passionately, I think also been some of you, perhaps you are looking forward to join in the in-person preview. What does that mean? Basically, this is something nothing new to those who are following through our cyber courses before COVID, right? Because you can see the physical sit-in, with Jay, right? So I think it's happening on the 21st of November, just about a month from now, 7:30 to 9:30. It will be scheduled in this Lifelong Learning Institute training room at this Paya Lebar, right? So indeed, for those who are very keen to know, please, we do provide you the QR code. Take this time to join in, because this event, basically, we have a limited space. We only provide up to 30 person. The first 30% who are joining in, you're able to join in. Of course, we are more than welcome for you to bring in your friends to join in, right? Because when you bring your friend, you also can get some goodies behind. So I think this is the moment for all of you to maximize on this 2-hour session, where I think there are some of you who are looking forward into this in-person preview. So please scan the QR code, right? And then do share with your friend about this event, right? Now, of course, we talk about a little bit of our keynote speaker today, Jay. Indeed, Jay basically start off for business. I think this year will be stepping into his year of 16 years. So as a stockbroker, as also as a financial advisor, I think Jay believed in very much into the investing strategy, and therefore I think he, from trading short line, it become this investing short line. So basically, he believed in using both fundamental and technical analysis, we call FA and TA, to form his market insight. He is also one of the very unique individual who are using a behavioral finance to form his market insight, right? So a lot of things to learn for this 2-hour session. I think love me to share more about that. But more importantly, well, for those who join in via Facebook Live, you can always post a question in the comments column. For those who join in via this Zoom session, yes, please feel free to post a question in the chat or Q&A. So in the right time, definitely Jay will provide the reply. So without much delay, I shall cordially invite Jay to take over mic from here, right? So please stay till the end of session, right? So Jay, I pass the mic over to you.
Yes. Thank you, Andy, for the introduction. A very good evening to everyone. Thank you for joining me in today's session on why does stock prices goes up and down. And it's really a very interesting topic. And this last quarter of this year, I'm going to go through this why series. Why? It is a very common question that people ask me. And especially this topic of, hey, Jay, how come today the share prices goes up? Hey, why this share, suddenly the share price goes up, down? And especially with my clients who like to ask me a lot, why? It's not irritating, but I see that everyone want to ask why is because they want to understand and to know why things are happening or what situation is happening right now. And it's really very clear cut that, especially for those who are really new to the stock market, they will ask the first question, why does share prices goes up and down? And in today's session, my attempt is really to help you guys, especially those who are new to the market, because I have a lot of listeners who come in to want to learn more about stock market. And of course, if you are someone who has been in the market but cannot find an answer to it, you have come to a right session, because in today's session, I'm going to help you to understand fully what constitutes a share price and what causes a share price to go up and down. And of course, with the numerous years that I've been in Phillip Capital, I got a lot of opportunity to represent Phillip Capital as a company, to represent them to go up to fairs like Invest Fair, SGX Connect, or even SGX events, and to represent a company not only to educate and teach people about how to invest in the stock market, but also to introduce good financial products to help them to elevate their investment strategy. And very often during such events, or even the 2-hour talk that I'm doing right now, that you guys are enjoying right now, I have been doing it for many, many years already. And very commonly, a lot of people like to ask me questions like, hey Jay, so how do I pick stock? Hey Jay, how do I decide to sell shares? Hey Jay, how do I have a successful investment plan? Honestly, it's really impossible to share all these things within 1 hour or 2 hours so in such fairs or even this webinar session today. The best way is to help every individual to go through a process, a systematic process, learning process, to learn how to properly make their investment work for them. Yes, indeed, with this idea and with this perspective, it is of my passion to train everyone to know how to make the investment work for them. AJ, very interesting title for this course name. Now, why I want to say make investment work is because a lot of participants in the market, they have been scrambling and using so much time in attempt to make the investment work. However, what I see is that they are working for investment, meaning they are glued to the screen. They are very concerned about share prices going up and down and so on and so forth. That's not the best way to invest in a market. The best way is to allow the investment to work for you with stress-free, with the comfort of your time. So I'm very thankful that making investment work has been accredited by IBF, because with IBF accreditation, whatever I'm training or teaching, it marks that whatever I'm training and teaching is of professional standard. Professional standard in the way that it is also not just based on my experience, it is also based on what professionals in the market are practicing. So I have been training many people, financial advisors, people like me, wealth managers, trading representatives, and so on and so forth from different firms in Singapore. And many of them are still around. Many of them are advising their clients on how to make their investment with them. So I'm very glad with the assurance and accreditation of IBF. Rest be assured that tonight, whatever I share with you, is not just based on my personal idea. It is based on what professionals in the market have been using, and this will definitely elevate your understanding on how to make proper investment decision. But before I can go into detail, I want to share some simple disclaimer and limitation, as tonight I'll be sharing some information or data which can lead you to make investment decision. However, please do consider that I have been using a lot of past data, past information, and this past information may not be the best indication for the future performance. So I try my best to give the as latest data as possible, but it's impossible to update data all the time. And more importantly, I think it's also important to understand that God has made everyone to be really different. This includes the risk that every individual can take. So I have my personal risk perspective, but do consider your own personal risk assessment before you make any investment decision. And lastly, I'll be focusing on Singapore stocks, because Singapore stock is something more relatable to more people, and more people can understand with all the easy information that we can find in Singapore itself. And lastly, I pride myself as an investor in the market, and at all times, I definitely will have invested position in the market. But rest be assured, today's session is not a session where I will give out tips and encourage people to speculate on certain shares. No, I will not encourage speculation, but what I am here the main purpose is to educate everyone to understand how share prices work, how come share prices can go up and down. Okay, so with this understanding of disclaimers and limitation of today's session, I want to start off with today's session. But to start with today's session, I think the first basic thing we need to clarify is this. Do you actually know how the stock market works? Because in order to know how share prices work, why it go up and down, you must first understand the main basic foundation of how the stock market works. And to my surprise, many people who has been in the market for many years say some of them may not even truly understand how a stock market works. So before I want to talk more deeply into what constitutes a share price and what causes a share price to go up and down, I want to share a short video clip to help every individual to understand how come there is a stock market and how a stock market works, so that it will be easier for us to understand what caused the share price to go up and down. In the meantime, if you have any questions, please feel free to ask the questions through the Q&A session. Okay, so with this, let me start off with the video.
The numbers we see every business day can tell us important information about our economy. But where do they come from, and what do they mean? This is stock markets in plain English. Let's get started by talking about companies. There are two basic types. The first is called a private company. Ownership in these companies is private, which means it's not available to everyone. They're usually small to medium-sized, and there are a lot of them, from the bakery down the street to a local trucking company. Private companies are typically owned by an individual or a small group of people. Because ownership is limited, we won't worry about them. Our focus is on companies that offer ownership to everyone. These are called public companies. Here's how they work. Let's say Zipper Corp is a successful company that has big plans. It wants to expand and build a button factory, but it doesn't have enough money. Because it's a public company, Zipper Corp can divide part of the ownership of the company into thousands of pieces and sell them to people like Maya. These are company stock, also called shares. This way, Maya gets to own a small part of the company, and Zipper Corp can raise money for their new factory. Being a public company allows Zipper Corp to raise money from lots of new owners like Maya. Now, Maya's share of the company has a value that typically changes each business day. When Zipper Corp is doing well, the future of the company can look promising. This means that the value of the company and the value of her shares may go up. People like Maya buy shares because they can make money by selling them at the right time. The big idea is to buy shares at a low price and sell them at a higher price. Of course, this is risky because a company's future is hard to predict. For example, people who believe the button factory is a good move may want to buy Zipper Corp shares because they think the value will increase. People who believe the button factory is a bad idea may want to sell Zipper Corp shares because they think the value will decrease. This means the company's stock has both buyers and sellers. Each business day, shares change hands, depending on how people feel about the company's future value. Some days there's more buying, which can cause the stock price to rise. Some days there is more selling, which can cause the stock price to fall. This is true for each public company in the market. As people buy and sell shares, stock prices can change each day. It's these exchanges across thousands of companies and millions of people that make up a stock market.
Okay, so I hope this video clip will give you a bit of understanding of how stock market work. But how does this going to relate to share prices? As you can see in the video clip behind, they have explained a little bit of it. But let me summarize what are the key important points they want to bring out in this video clip. First of all, whenever we buy a share in a stock market, we are actually the owner. We are the partial owner of the company. For example, I myself right now is an owner of DBS. I can proudly tell my friends they are owner of DBS, and especially on Saturday, when DBS, the internet banking was down, or even some ATM machines around was down, a lot of my friends told me, hey, Jay, your company, the services did not provide to what is expected. Wow. I'm convinced that, yes, I'm a shareholder of DBS. Things happen. There could be some implication in the company. And this can drastically change my perspective as a shareholder, whether is it worth for me to continue to be invested in company, or whether is it not worth to be continuing invested in the company. So this will come to have to me to be a perception. How do I believe or perceive the price, the future price of DBS is going to be like? So that's where another element, which is not just being an owner of the company. The other element is about how much do I believe in terms of the future performance of company, i.e. the earnings, or even the dividend payout, and so on and so forth. So it's about perception of the future. So through this video clip, you can see that in the stock market, it consists of different people, the group of buyers and a group of sellers. Buyers are those who perceive that this company in future is going to give a very good value for a buyer. And for the sellers, they perceive that this company in future is not going to do well and it's not going to provide them good value. So these are two components. One, we need to evaluate the company as an owner of the company. And we also need to evaluate the company of the future of the company. So this will form the price of the company. And in stock market, the share prices we see every day, like DBS today went up strongly, then came down. Yesterday came down after reaction of the incident that happened over Saturday. The market always have different perception of price in each individual market days. So with this understanding and with this foundation, then we can start to talk about how does the market price a share. Okay, how does the market price a share? Because every day the share prices keep on fluctuating. How come it keep on fluctuating? So that's where I'm going to help you to understand how does the market price a share. Now, when it comes to pricing a share, it involves two components. Component number one is the intrinsic value, and the component number two is the market sentiment. The totality of both together will equate to the price of a share. When we talk about intrinsic value of a company, to value intrinsic value, it is something that is quantifiable. That means we can use mathematical formula to justify and eventually to calculate out a value. And in order to do that, the analytical method that we use is what we call fundamental analysis. So fundamental analysis is a study of the company performance through its financial reporting. For example, the financial statements, like the study of the balance sheet of the company, the study of the profit and loss of the company, or even the study of the cash flow company. And through the balance sheet, the profit and loss statement and cash flow statement, there are a lot of numbers. And all these numbers are quantifiable. And we can quantify this number in order to derive a value. So once we have a value, then we can calculate what we call an intrinsic value. However, stock market is not as straightforward as what we think. The way we quantify things can be very different depending on how do we perceive in the future. The main impact on changing our perception is not because of the company performance only, but it's also because of how do we feel. You see, our belief can be influenced by our emotions and feeling. And that's where the market sentiment portion, which signifies the emotions and feeling of a stock market, that will come in. But when we talk about emotion and feeling, are we able to quantify the emotion and feeling? The answer is no, not exactly. Can we quantify how angry are we? Yes and no. Can we quantify how sad we are? Everybody has their own different measurements. So that's why market sentiment is something that is unquantifiable. However, over time, the emotions of anger and emotions of sadness, happiness, all these will come out to have a pattern. There's a pattern. There are certain things that can make me smile and become happy about. There are certain things of life can make me angry. And over time, all these can create patterns. So when we study patterns, then we can use patterns to anticipate, or some people say predict what's going to happen later on. So to study the market sentiment, the way is to identify patterns of the sentiment. And when we study the stock market itself, we look at how prices move. So when we study prices moving, we have a term for it. We call it technical analysis. So that is why in the stock market, if you are trying to understand how to invest in the stock market, you will see that there are many people talking about fundamental analysis and technical analysis. Why? Because this is the foundation of pricing a share. However, some people will choose to only do fundamental analysis only, so as to derive a value for them to decide whether to buy a share. And there are some people who don't want to spend so much time to study the numbers of the company, decided to just specialize studying in the market sentiment. For me, I felt that it's important to combine both because both constitute the full component of pricing a share. Then I can have a complete picture of how the share price can go up and down. I would not want to have only half of the picture itself. So I hope this will give you a holistic understanding of what constitute or what are the components of pricing a share itself. But of course, today's session does not only just end here. The next question that most of us will ask is this. Jay, then how do we do intrinsic value? How do we quantify it? And how do we also use market sentiment to our advantage to decide when's the best time to buy and sell a share? Now, before I can go into that, I also want to help you to understand what cause, why share prices change. What are the factors, the two components? When the two components change, then the share price will change. Okay, so let me very briefly go through what happens when share price goes up. So whenever we start to see the share price goes up, like today, the market has went up slightly, and majority of the counters that is listed in Singapore Exchange has went up. That means the share price went higher. When share price goes higher, there are a few possibilities. Generally, these two possibilities. First, the intrinsic value of the company expanded, meaning the company value increases, assuming the market sentiment doesn't change. This can increase the price of the share. On the other hand, or another possibility is this. Majority of the time, the intrinsic value of a company doesn't really change. What will change more often is actually the market sentiment. So when the market sentiment, like today, when the market ends up higher, it means that market participants feel that the next few days or even weeks to months or even years, they believe that the market performance or the share prices can continue to go higher. So this is the market sentiment, and usually most of the time why share prices goes up and down usually is because of some market sentiment. And of course, it can be both together. Intrinsic value increases, meaning the company performance, they earn more money. At the same time, because they earn more money, the market sentiment become more positive. Both of them can increase together at the same time. So vice versa, when the share price goes down, it's going to be very easy and obvious. It could be because of the decrease in the intrinsic value, or it could be because of the decrease in market sentiment, meaning they feel that, they believe that the company in future is not going to do well. So these two components are the basic element that cause the share prices to go up and down. Like what I emphasized earlier on, usually most of the time when market prices move up and down daily, it is usually due to market sentiment. And because of that, you can also start to understand that, hey, in the stock market, wow, a lot of people like to look at technical analysis. A lot of people like to look at price chart. They like to look at how prices move. It's true because it changes every day. It is something that's frequent. So people like to spend a lot of time looking at how share price goes up and down. But if a person like me will say, I want to spend my time to do something that I find that are more precious to do, then probably studying the intrinsic value of company can be more relaxing. There's no need for us to commit much time to do it. So I hope that this will also help you to contrast that different school of thoughts, how it can differ in terms of time commitment itself. But of course, we now will go in deeper into a topic to understand two separate components, the intrinsic value component and the market sentiment component. Let me start off with talking about the intrinsic value component first, before I start to talk about the component of the market sentiment. Now, what constitutes an intrinsic value? Now, this is how an intrinsic value is like. We can break down intrinsic value into two things: the book value of the company and the future value of the company. So what do I mean by a book value of a company? A book value of a company, it means that if the company decided to close down today and is able to sell whatever assets they have and to repay whatever liabilities they have, what is the end value as a shareholder we are going to get back? So usually, book value is very easy to identify. Why? Because companies are being mandated to report their assets, liabilities, and report all the value of the share of the company, the book value of the company. So the value of the company, the book value of the company can be very easily identified through the financial report. Although many people will start to think, hey, so like that, can we identify the book value of a company every day? The answer is no. Companies are in operation every day. Yes, company make money every day. Company has different cash flow every day. But do you expect a company to report their earnings directly every day? It's impossible. It's going to be a big administrative nightmare, especially for some of you who are working as an accountant. It's really going to be very tough. So therefore, many of the book value valuation in Singapore, they don't report every day. Okay, usually they report either half a year one time or another level of every quarter one time. So that is the main reason why when I say intrinsic value don't change most of the time, is because of the portion of book value. Now, however, stock market is not so simple just by looking at the book value of company and then determine whether to buy or sell the share in book value of a company. Why? Because if I invest in a company, the company should have potential to earn more money. When they earn more money, what will happen? The company is profitable, but what motivates a person like me to become a shareholder of a company? What motivates is that if I become the shareholder, when the company earn money, I will also earn money together with the shareholder. And very often when companies earn money, they also pay a portion of their profit to shareholder via dividends. So being a shareholder, I will also receive an income. I will receive a dividend income from them. So it's all about understanding in future, is the company going to earn more money? It's also an understanding in the future whether a company is going to pay me as a dividend. But when we talk about future, the future is defined as infinite. So that is very hard to fix a time frame. So one of the best way to help you to identify the future value of a company is by using different forms of valuation models. In the market, there are many different types of valuation models that we can adopt. But what I can share, and what up to my own knowledge, is that there are these few valuation models that you can consider and you can learn. And it's easily available, information are easily available for you to easily calculate out the value of the future value of company. First one, the most common method that we use for future valuation is the DCF method, or what we call the discounted cash flow valuation model. And an extension of the discounted cash flow model, we can also make use of what we call the dividend growth model, or some people call it the Gordon growth model. It's actually the same thing. And another methodology that has been used for many years is used by the founder of the fundamental analysis, which is called Benjamin Graham. He himself also have an idea or a valuation model idea that is being given out. We can use it to also come up with a value for a company. And last one, in our current era, Mr. Warren Buffett, he himself also has shared how he used various models to derive and build his own valuation model. And I call it the Warren Buffett model. So in the market, there are really different forms of models. And you will see that models are being modified and being made use, especially Mr. Warren Buffett has been making use of both the DCF model and the dividend growth model. He used it to derive the value to help him to decide whether is it worth to invest in the company or not. So when would one person be triggered to be interested in buying certain share based on this intrinsic valuation model? So I want to use the following diagrams to illustrate to you how it works. When we talk about valuation, there's a portion of valuation that overlaps with the market sentiment. And usually the portion that overlaps is about future value. When we talk about future value, we are actually, in terms of fundamentals, we are actually making some assumptions, assuming that the company earnings can consistently grow or consistently maintain. However, such assumptions may not be true and may not be accurate. What usually will change the assumptions of the future value can be a lot of different factors, especially those macro factors like the economic situation of the country, or even the whole world, or even factors like inflation, or even the interest rate, which I have been experiencing since last year. And what about confidence level, confidence of industry, or even consumer confidence, especially to retail kind of business? And among all, one of the factors that can affect the overall economic factor situation is the political situation. So very often, this kind of macro factors can affect the calculations of the future value itself. So in other hand, what it means also like this. You will see that these two components, the intrinsic value component and the market sentiment component, they actually overlaps with each other. So there is a portion of valuation, it needs to be understood and understand by market sentiment. And we can make use of this overlap to help us to identify one thing, whether the company now is overvalued or undervalued by the current market price, market sentiment. So over here, to illustrate what it means by overvalue and undervalue, I have a price chart. I have a chart over here. This blue line indicates the intrinsic value of the company. Like what I shared earlier on, intrinsic value usually do not change much. Usually it will be more gradual. As long as the company continue to make earnings, make profit, the intrinsic value of the company should increase gradually over time. However, in the real market situation, the market price or the market value does not stay as close to the intrinsic value. Why? Because market is always anticipating and always trying to understand in future what is the future value of this company. So at some point in time, the market may be trading above the intrinsic value. At some point in time, the market may be trading below the intrinsic value. Why? What caused it to be trading above or below? It's actually simply the market sentiment. So whenever the price of the market is trading above the intrinsic value of a company, we call it overvalue. Whenever the price of the company is trading below the market, the intrinsic value, we call it undervalued period. So very often, when a share price is in the undervalued period, it should entice people to start to look into the share and start buying the share. Why? Because it is undervalued. So there will certainly be one point in time, the market will try to adjust the price towards, meaning, or in other words, adjust upwards towards the real intrinsic value of the company. And from there, you can make a price difference and you can make a profit through that. And of course, if you understand overvalue, if you see that now the price is getting overvalued, it can also intrigue us or to help us to anticipate that, okay, I shouldn't be holding on to this share right now. I can actually make use of the opportunity to start selling in the market because it is overvalued. So you see, valuation is important. Intrinsic valuation is important because it can help us to identify what kind of situation this particular share or stock is trading at. And through that, it can also give us an idea whether we should be looking towards buying or we should be looking towards selling in itself. So this will establish a very important foundation for every individual, especially investors, to decide whether is it worth to invest in this share. So this year, I created a 2-hour workshop to teach people how to properly use the different valuation models to help them to understand how to calculate out the intrinsic value itself. In this 2-hour workshop, what we will learn is these 4 different valuation models, how it works, how the formula, how to understand the formula itself. And I think more important thing is that it's not just about learning and listening how it works, but I want to encourage everyone who attend the 2-hour session to practice. So to practice means that I have to create ready-made spreadsheets for them to enter the data. And when we talk about data, how do we retrieve the data? What data should we be looking at, and so on and so forth. All this we need practical sessions. So in this 2-hour workshop, rest be assured there will be practical session for you to hands-on to help you to find the intrinsic value of individual company. So same thing, I'll be focusing on using Singapore company, Singapore stocks, using a central platform for us to find information, which will be using POEMS 2.0 itself. So if you are existing, you have attended making investment course before, you should seriously consider to sign up for this 2-hour workshop on the 7th December. That means at end of the year. I purposely push it to end of year so that everyone can have opportunity to learn. You'll be over Zoom online on Thursday night 7:30 p.m. to 9:30 p.m. Okay, so enough for my selling on this intrinsic value portion. Like I shared, a lot of the information is impossible to really teach and share and even get people to practice within the 2-hour session. So there's another portion that we really need to understand. Intrinsic value only help us to understand whether a company is overvalued or undervalued. So we need to also identify the market sentiment in order to tell us at which exact point that the sentiment has started changing. Why is it important? It's because we need to identify when is the best time to buy and when is the best time to sell. Very often, a lot of people buy or invest in companies based on, hey, it's undervalued. But when it's undervalued and they start buying, they start to ask themselves, hey, how come the share price keep on dropping? And very often, the moment they cut loss, the moment they sell off the company, the share price start to rebound. Why? Why all these things are happening? Or when you see that, hey, the value is now overvalued, I should be selling, and they sell, and it happened that they sell off too early. All these things are actually happening if a practitioner of fundamental analysis continue to just fix to fundamental analysis to decide. You're bound to face this kind of situation. So the best solution, the best way is to also understand the market sentiment to help us to decide when's the best time to buy and when's the best time to sell. So now I'm coming to the second portion of the talk today. But before I want to move on to the second portion of the talk today, I'm going to take a very short water break. And if you have any questions that you want to ask, please feel free to use this small break to ask me questions. Okay, so to use your Q&A section, the button, press on Q&A button, and then you can type questions and use this opportunity to also answer questions. The more questions asked, the more information you're going to receive, and you're going to learn much better. Okay? Okay, no questions? No questions means I believe you have understood the part of intrinsic value. You understood the two components. We cannot just use it independently. It must come together as a whole. So now, since there's no questions, I'm going to move on to talk about how do we understand, how do we derive understanding towards the market sentiment portion. Now, when we talk about market sentiment, it can be broken down into two types of sentiment. Either the market now is in a bullish sentiment, or the market now is in a bearish sentiment. So let me attempt to explain to you what it means by a bullish sentiment, what it means by a bearish sentiment. When we talk about sentiment, it's actually the understanding of the feelings or the emotions of the market participants. And when we talk about market participants, we are talking about two groups of people. People who want to buy the particular share, or people who want to sell the particular share. But generally speaking, these two will net off, and then you will come out to an idea, a general belief by the market participant. So when we talk about bullish sentiment, the market participant generally will think that this particular company or industry in future is going to have a good future. Meaning in future, the company can earn more money. So when they believe it can earn more money, then the market prices have a tendency to move on the upside. But how come market prices will move on the upside? It is because of these two groups of people, the buyer and the seller. So let me attempt to break it down to explain what is the buyer thinking at this point in time. So the buyers, when they see and believe that this company in future is going to do well and earn more money, when they believe, it also means that they do not mind to pay a higher price. Because if you believe that this company is really good, even if it come at a higher price, you can choose to buy at a higher price. So in other words, or in simplicity, the buyers are very willing to pay a higher price for a share because they believe it's going to go higher. So that is the buyer side. So very often the buyers will sway whatever price they see at the sell queue. That means if you see our trading page, there will be a buy price, and a bid price, and an ask price. And very often buyers who are very positive about this company, they'll be willing to buy at the ask price. Ask price is usually higher than the bid price. So this is what I mean by willing to pay at a higher price. Now, this does not mean that share price will definitely goes up. It's also dependent on the sellers. Sellers at this point in time, they will have the same information as the buyer. And since the sellers have the same information, they will think that, hey, since this company is going to do well in future, if I want to sell, do I want to sell at a lower price? No. This time around, when they see that this company is going to do well in future, they will not be willing to sell at a lower price. Instead, they expect, okay, I repeat again, they expect to sell at a higher price. So the seller price will generally be much higher. And when seller price are higher, the buyers who is willing to buy a higher price, if they choose to buy, it will cause the share price to go higher and higher. So this is the chain effect. Okay. So when we talk about bullish sentiment, there's a chain effect of buyers willing to pay a higher price. The seller are expecting to sell at a higher price. So that is the bullish sentiment. So vice versa, that means the flip side of bullish sentiment is naturally the bearish sentiment itself. So when you look into bearish sentiment, this time around, the belief of the market participant is belief that this company, particular company in future is not going to do well. So when it's not going to do well, what will happen to the buyers? Are they willing to pay a higher price right now? No, they are not willing because they are expecting the companies in future, they are believing in future this company is not going to do well. So therefore, the buyers now are expecting that if I want to buy at a low price. I don't want to buy a high price right now because I don't have confidence that this company is going to make more money in future. Okay, so you see a flip side now. They are not willing to pay a higher price, but now they're expecting to pay a lower price for a share. Then, what about sellers? Also vice versa. This time around, they realize that they cannot sell at a higher price anymore. They cannot expect to sell at a higher price anymore. And now with new information, this company is not doing well. And they are expecting that the company is not going to do worse in future. So therefore, if someone is offering to buy the share at a lower price, they will sure be willing to sell at a lower price. So therefore, this will cascade the price to go lower and lower over time. So this is the difference between the bullish sentiment and bearish sentiment. And if we are able and prompt to identify the bullish and bearish sentiment, then you will be able to know how to make very wise decision to time the market itself. So the next question right now, once you understand the concept of the bullish and bearish sentiment, the next question is that, then Jay, like that, how do we identify the market sentiment? That's where technical analysis will come in. So when we talk about technical analysis, it is a study of the market price. And when we study market price, we can break down studying of market price into two portions, like what I share in this diagram. The bigger portion, you see the bigger portion of this triangle is what we call the classical technical analysis. Classical technical analysis is a study on chart, how price chart move, or we call it the study of price chart patterns. So when price move, it will show some patterns. And through identification of how these patterns repeat itself over time, we can use it to identify where the price is trending towards. Is it trending upwards or is it trending downwards? And when it moves, when it has a pattern, it can also create what we call a support and resistance level. And there will be some phenomenon happening at this support and resistance levels. So classical analysis is study of trend, support and resistance, and also how volume can impact, how the transaction volume of a particular share can have an impact on the price, and also the trend of the company itself. So this forms the most basic, the majority, not just basic, also the majority of foundation of technical analysis. But however, when we talk about patterns recognition is not as straightforward as we think. Sometimes the patterns can take very long to form, sometimes it can take very short time to form. But specifically, there are really different shapes and sizes. And with the improvement of technology, with our computing power nowadays, patterns can be easily identified using what we call technical indicators itself. So technical indicators is by using a set of formulas to attempt to try to quantify the patterns. So as through this quantification, we'll be able to see some indications of where the trend is, or even indication of where the support and resistance, or even some indicators come with analyzing the volume also. So in my arsenal of technical analysis, what I usually use is actually the moving average indicator, MACD indicator, and the Ichimoku cloud indicator itself. Okay. So you see the whole picture of technical analysis is also very vast, just like fundamental analysis portion. So when it's very vast, eventually what is the key important point we need to learn, especially in technical analysis? Okay. So in technical analysis, when we want to use technical analysis, we use technical analysis to help us to time the market. And in order to properly time the market when to buy and sell, that's where reversals signals are very important. Reversal identification is important. What do I mean by reversal identification? Reversal identification can mean this way. Either we are looking for a bullish reversal situation, or do we look for a bearish reversal situation? In a bullish reversal situation, it means that price has been trending downwards, trending downtrend. And when you have been trending downtrend, the price of a share is getting cheaper and cheaper, most probably undervalued, under the value of intrinsic value. But should we buy as the trend continue comes down? Many people say, since it's cheap already, I buy. But very often they may be caught that the price can go even lower. Why? Because the sentiment is a bearish sentiment. Buyers are not willing to buy at a higher price. Instead, they are willing to buy a lower price. Sellers are not willing to sell a higher price, but now they are very willing. They are expecting to sell at a lower price. But there will be a situation where the buyers start to realize that, hey, it's cheap enough already. I don't mind taking the risk of the share price going lower and start buying. And there will be a situation where the sellers will realize that if I sell right now, it's really selling way too cheap. So they are not willing to sell at lower price. There will be one point in time, there will be a change in sentiment. From bearish sentiment changing to bullish sentiment. So whenever this reversal happens, when we talk about bullish reversal, it means that bearish sentiment change to bullish sentiment. So when I'm able to identify the bearish sentiment is able to change into bullish sentiment, then I will initiate an opportunity to buy, even as an investor, even as a practitioner of FA itself. So vice versa, as a bearish reversal pattern, you will see based on bearish reversal pattern, bullish sentiment, price goes up, price goes higher, it goes in an uptrend. But it will be surely one point in time where the buyers will realize, hey, I think a bit too expensive to buy. And when they realize that it's a bit too expensive to buy, the sellers is unable to sell at the price they want. So now they will start to be willing to sell at a lower price. The buyers only expect to buy at a low price. Then this can drastically change a sentiment from bullish sentiment to bearish sentiment. And this is where the bearish reversal will happen. And this can cause a good opportunity for us to sell. Okay, so this is a summary of the bullish reversal and bearish reversal patterns that we can do. End of the day, when we talk about technical analysis, this is the most important portion to understand. And due to time limitation, it's impossible for me to explain further how to identify a bullish sentiment and bearish sentiment, how to identify a trend, and so on and so forth. But one of the quickest way or the faster way to help you to identify is by using technical indicators. That's why once you understand the foundation of technical analysis, you can make use of technical indicators to help you to enhance your overall analysis, to make it easier and more straightforward. So one of the technical indicators that I want to introduce to the public, which is something not very commonly used, is the Ichimoku cloud indicator. I want to introduce this because I find that this is a very powerful and versatile indicator, which can be used for different kinds of market situation, not just from trend identification, but you also can establish to help you to find reversal point and also to help you to identify the momentum of the price chart. So this Ichimoku cloud indicator, very powerful. Okay, over here there's a signal to warn that there's a possible trend reversal. Then after which it also has a signal to signal that it has confirmed the sentiment from bearish sentiment, it has confirmed switch to bullish sentiment. So once it's confirmed, it also indicates that, hey, we better buy. So whenever there's a warning, we can also trigger, there's some level of trigger that can trigger us that, hey, okay, this is the first entry point that we can consider to buy first. But then it may be wrong. But if it's correct, when there's confirmation, it can trigger another second entry point for us to start buying into the market. That's how technical indicator work. That's how people make use of technical indicator to enhance their chart reading so as to create a trading opportunity for them. But when we talk about trading opportunity, when we talk about trading means that I don't just buy and invest and just hold forever. When you talk about trading, that's where people will find selling opportunity to sell. So usually in the short term, the indicator will have changes. For example, when it starts to show some reversal warning, the person who want to trade the market can consider to use this indication to take profit. Or when there's confirmation, definitely it's going to trigger them to definitely want to exit the market and take profit out of the market. So that's how people can make use of this Ichimoku cloud indicator. Very powerful, very useful, but of course there's a lot of other functions. Over here, I'm just giving you all a very quick snapshot and to see this particular company, DBS, as an example to help you see, hey, actually this DBS got opportunity before. Okay, so we can make use of this indicator to enhance our market timing itself. So I have a 2-hour workshop on this Ichimoku cloud indicator, which will be happening 1 week after the intrinsic value, which is on the 14th December, Thursday, 7:30 to 9:30 p.m. And this will be focusing towards just learning how to make use of this technical indicator itself. This indicator, end of the day, it's not just understanding about how to use this technical indicator, but it's also hands-on to help you to understand how to read the technical chart using Ichimoku. So it will be a practical session because I also have designed a special scoring form, a special sheet to help you to step by step identify what is this indicator trying to tell you. And through that, you can make wiser investment decisions. And of course, usually when we talk about technical indicators, one may not be enough. It's important to also use a few indicators to reaffirm and to also to boost the probability of accuracy. The next indicator that we consider to learn also is the MACD indicator. It stands for Moving Average Convergence and Divergence Indicator. This indicator is an extension of the moving average indicator, which I taught inside my Making Investment class itself. Okay, so how it works is this. It's pretty similar with the Ichimoku cloud indicator, but sometimes it may be a little bit earlier than Ichimoku cloud, or sometimes later. It depends because of different formulas they use. Okay, but the usage is pretty much similar. So indicator over here, it indicates that there may be a possible change, a possible reversal in price. And when it indicates a confirmation that, okay, now high chance the price is likely to go higher, it can indicate that the trend has already reversed. So when you have a reverse, you should give us the confidence that, okay, we should be entering the market and start buying. So with itself, it comes with what we call the MACD histogram, where it can trigger short-term triggers to tell you when to buy. And not only one time, but it can also trigger another time to tell you hey, we should be looking towards the buy. So with the same methodology, it can also trigger when the bullish sentiment is going to change to bearish sentiment, and can trigger you confirmation that when it changes, you better sell the share. So we see technical indicators are there to really help every individual to read the chart much more easily. Okay, but most important thing is to help you to enhance the overall technical analysis situation. So MACD is another one that you can consider, which are also going to use 2 hours to teach over Zoom online on the 21st December on Thursday night, 7:30 to 9:30 p.m. So these are the large arsenal of tools that we can use to do technical analysis, of course, including my Making Investment course itself. But before I talk more into the courses on how we can further analyze individual company, I think it's also important that through my session to show you living proof, to show you that how to make use of this information to give you an understanding of individual company. Okay, and all these 2-hour courses we will be using the standard platform. We will have in order to learn. I think it's important to use live numbers, live data, and through these numbers and data, we can then better understand how to get this information for our benefit itself. Okay, so what I'm going to do now is that I want to demonstrate using Poems 2.0, my personal account, and me being a wealth manager in Phillips Securities itself. Is the best platform that I found that is easy for every participants for my course or workshop to use. And even if you don't have a Poems account, you can actually open a demo account. So I don't have obligation to make sure that everybody open trading account with me. No. My obligation is to educate everyone and make sure everybody know where to find their data, know how to analyze themselves and get the information by themselves. So what I'm going to demonstrate right now is to help you to see how to get all this information. Okay. So I'm going to demonstrate using one company called DBS. Like earlier on, I start off today's session talking about DBS. I've been as a shareholder. So disclaimer, I'm not encouraging people to buy DBS here, but I want to use this as DBS as an example to find information. Like for example, when you talk about intrinsic value, I talk about the book value. Book value can easily find one. Where to find? Okay. So to find it very easy, you can put DBS in the watch list or something. Then you right click on the company DBS, then select stock analytics, okay, and left click. So when you select stock analytics and left click, you open up another window, and this is where all the information of DBS fundamental information are found. Now, to find the book value of company, I can tell you it's really very straightforward. Okay, although you can see, wow, fundamental seems that got a lot of numbers, a lot of things, wow, very intimidating. But actually, once you know where to find, it's going to be very easy and straightforward. Okay, now for example, under book value, you can look at basic stock information. Okay, under section of basic stock information, then you look under valuation. Okay, book value is part of the valuation formula. So when you look at valuation, you can look at book value per share. Very straightforward. This platform gives the numbers already. So book value per share of DBS is at $21. It's at $21. So what does this mean? It means that if DBS is to close down and distribute back the money back to shareholders, as a shareholder, I'm going to receive $21.18 per share. Okay, but wait a minute, Jay. But DBS, based on yesterday's price, is at $33.45. Why the market is trading above $33.45? Is it overvalued? The answer is no. Why? Don't forget one portion that I taught earlier on. When I talk about intrinsic value of company, it's a combination of the book value plus the future value of the company. So therefore, we need to use valuation model to help us to identify the future value of the company itself. Okay, so therefore, when you see the share price is trading higher than book value, it doesn't mean it's undervalued. Okay, you need to identify the future value portion of DBS. So how do I identify the future value portion? Very straightforward. I take the last traded price, $33.45 minus $21.18. You see that the market is willing to pay additional $12 like that, $12.30 thereabout. So they are willing to pay $12.30. What does it mean? It means that they believe that in future, the future value of a company can be more than $12 plus. So therefore, it can be worth it for people who buy. But of course, the seller side will think that it may be not worth it. Okay, so that is the value that we can look at as an intrinsic value. But of course, we also talk about the portion of the sentiment. Probably $12 as extra premium over the book value. It could be due to the sentiment. Like today, the market went up for DBS. Where's my DBS? Okay, went up by 1 cent. Okay, $3.45. How? That's where we have to look at the price chart itself. Okay, so when we look at the price chart itself, we can actually make use of poems to look at the chart under chart line. Okay. Okay, give me a while my system load. Okay, so right now this is how the chart life look like, and I have used the Ichimoku cloud indicator as an example to show you. Okay, so with this Ichimoku cloud indicator, it shows one year worth of data, but usually we don't need to look so far. Okay, I can share with you that recently this year, I have also advised my clients, I myself also look into buying into DBS. Why? Because of some indication from the Ichimoku cloud. Okay, so at the second half of this year, during June, it shows some indication. Then there's a indication of confirmation during July, recently July. Okay, I have initiated and tell some clients that it can look towards to buy. Okay, when they look toward buy, why? Because I see that there is some chances of reversal, but I cannot confirm with them. It's only until August, more recently, that I can, okay, the Ichimoku gave me confirmation already. And since there's confirmation, actually, it's really pretty safe to start buying based on chart right now. And therefore, there's another trigger to start buying. Recently there's trigger to buy. Okay, so this is how we can make use of chart to give us some ideas when to buy and sell. But of course, whether going forward in the future, is DBS price going to go higher and stuff? Do I know? I don't know. But that's where I have to come to use fundamental analysis to identify intrinsic value of company. And I noticed that from my own personal calculation, the intrinsic value of company is still worth it to buy. So it's not advice, again, guys. It's not for me to advise whether to buy or sell right now, but I just want to showcase this as a recent example that we can make use of technical indicators to trigger us when to look at this stock to buy or not. And this is an example of Ichimoku. Let me quickly use an example of MACD. Okay, MACD indicator is below, it's not on top of the chart itself. Okay, so MACD indication, it has also shown a confirmation or reversal in trend during this period. Okay, slightly later, July period. So there's a confirmation, and when there's confirmation, there are also multiple signals from the histogram to consider to enter the market itself. So we can make use of histogram lah. All these histogram are actually timings that we can trigger you to start buying. So that what I'm trying to say is that actually stock market in terms of analysis, it is really, really very versatile. We can make use of a lot of information, is available, is free, and the key thing is this: how do we make use of this information to properly systematize it, not just conceptualizing it, but to practically use it to our advantage. Okay, so thank you for some questions from KT Adam. Okay, I'm going to use some time to answer some questions. Okay, KT Adam asks, FA for investor, TA for trader. Do you combine both? Are you an investor or trader? I think over my 1 hour plus of talk, I have really declared that I'm an investor. But if I say I'm an investor, doesn't mean that I do not practice TA. You get what I mean? I'm a practitioner of both FA and TA. Because ultimately, end of the day, both technique, fundamental analysis and technical analysis, both technique has its pros and cons. And the pro can supplement the cons of the other analytical method. So I combine best of both worlds to help to bring a wiser evaluation and decision itself. Okay, so eventually, whether I'm an investor or trader, a lot of people ask me, hey Jay, how to define investor and trader? Now, the standard definition for investor is people buying into a share with intention to hold for long term. But the word long term, how you define? Some people say 1 year is long term, some people say 3 years is long term. Now for me, my definition of long term is that I want to hold on to the share as long as the company is still performing, meeting my objective of what I want. Okay, that is my long-term definition. So that's why in the market, there's too many definitions. And in my course, Making Investment Work, I also have talked about how to redefine certain things, especially in terms of definitions. Okay, how do we define our objective? Because you and me can be very different. Our short-term, our long-term definition can be very different. But how do we define all these short-term and long-term? It really define based on our objective of investment. Okay, when we talk about objective investment, then we have our expected rate of return and stuff, which can be used towards valuation models and so on and so forth. So it's important to be clear of what you want. But the next question is that if I want to sell, how do I sell? Definitely, I want to use technical analysis as a timing tool to help me sell. But do I sell everything or do I sell partially? And why do I sell partially? That's where another topic that I teach in Making Investment course is the topic of what we call behavioral finance. We need to understand our own individual behavior. Some people will say, I don't mind holding for long term because I don't need. Some people, why they don't mind is because they are able to take more risk. So it's also a issue of risk. So some people not willing to hold on a share very long because they do not dare to take risks. That's why in the short term they sell off and they become a trader of the market. That means they go in and out of market. So there are times where I buy a position, when it meets my objective, I will sell. So do I become a trader itself? So yeah, that's where a lot of confusion. Thank you for this question. For me, I still skew towards investor, but I do not just use FA to decide what to buy and sell or to decide what's the price to buy. I still use TA to help me to time the market. But eventually, what really defines the success of investment returns, it is really dependent on the understanding of yourself in terms of objectives and your personal behavior, and also dependent on setting up a system for you to decide when to take profit, when to cut loss, how much funds should I allocate to a particular share, and so on and so forth, which I call it the portfolio mix or position sizing. It all encompasses the whole investment network. In today's session, I'm just talking on the topic of pricing. I haven't talked about topic about our investor behavior. And very often, what makes an investor to be successful or even traders to be successful is actually the behavior itself. So making investment class, you will see that we will spend one full session to talk about behaviors and how to manage all this behavior itself. But I'm afraid to say that this year, 2023, I'm not going to run any more making investment course. That's why I'm not promoting this making investment class. But since there's this question being asked, I also want to share that I have more or less come up with a schedule of making investment class for next year, which is in January. Okay, probably late January. But what is left to firm up is to firm up the scheduling and stuff. Okay, with Cybercode itself. But when it's available, when we have confirmation, affirmation, definitely I will share everyone. Okay. Okay, Katie Adam also asked another question. Does your valuation for intrinsic value apply to US stocks? The answer is yes. Okay, it applies. The model applies for all sorts of companies, even private or public listed company can apply. But the question, the difficulty for intrinsic valuation is about finding the data. So far for US stock, definitely can have the data to find. Okay. But in terms of accounting standards and stuff, it can be really very different. Okay. Because in terms of US stocks, sometimes the accounting standard can be different in terms of valuation and stuff. So this can bring some complication to valuation. Okay. But generally speaking, whatever I teach in the 2-hour workshop, in the intrinsic valuation portion, it will help you to have the structure and understanding of the calculations. And if you want to make adjustment, which definitely in the class I'll say, hey, these are structure, these are skeletons, but end of the day, it dependent on the individual company, industries, and they have their own standards. You need to make adjustment eventually, because there's no one fixed methodology. Even Mr. Warren Buffett, he has shared with his dear buddy to set up his funding. Both of them, they when they calculate a particular company, both of them will sure have different intrinsic value. Very interesting. Why? The key factor is about our expected return. Okay, different people have different expectations. So that's why the valuation will sure turn out differently. Okay, that's why stock market prices will go up and down. Everybody has different opinions. Who will know the ultimate opinion? Nobody knows. It's only at the end of the day, the closing price, you will be used to judge that, okay, this is the price that we think is correct. Okay, but everyday change. So when we talk about everyday change, then how will we measure already? That's why technical analysis have to come in. That's why writing Ichimoku, Cloud, MACD, all these have to come in. So I pride myself as a trainer to really want to train and help every individual to understand how to evaluate a market. The closest to heart for most of us, because we're living in Singapore, we're Singaporean, is definitely the Singapore market. So all my 2-hour workshop will be focusing and based on Singapore market first. Because Singapore market is much more simpler. Okay, yes, there's lesser choice price volatility can be less volatile than the US market. A lot of people, they claim they can make a lot of money in the US market. But think about it. When we talk about investment, it's also, you have to understand the risk of investment. When you talk about risk of investment, if price goes up fast, it can also come down fast. So when there's volatility, it means the risk, the probability of going up and down also increases. But Singapore market has been well known to be a market where the price is less volatile. So when things are less volatile, it's actually more predictive in nature. There's more certainty. But when there's more certainty, when it's more predictive, it comes with a price. High risk, high reward. Low risk, low reward. But eventually, the keyword is reward. It can also offer reward. So that's why a lot of people get confused and on the day, things are US market can make more money. Yeah, you can make more money, but be also aware that you can also lose a lot of money there. So up to individuals to balance their own risk level. This one is really true for sure. Over the experience I have more than 20 over years in the market. I can vouch and say that high risk, high reward, low risk, low reward. But high risk also means that you got lesser probability of making money. Okay, low risk means you have higher probability of making money. So which one you want? So for me, I find my comfort zone within Singapore, and I believe that you're also going to benefit for many participants in Singapore market. So that's why my course and also workshop are all tweaked towards the Singapore market itself. And on top of that, each workshop will cost $199 before GST. I'm not going to price it at a very extravagant price because I also understand that most people who want to learn, either they are new, they don't want to take risks, or people who want to learn, they have lost money in the stock market before. So $199 is a small fee to help you to improve your knowledge, improve your wisdom in making wiser investment decisions. And to encourage everyone to be able to attend this course, the best encouragement is me being around. So the bonus is this: you sign up for any individual workshop, okay, 2-hour workshop. I will definitely use my time, okay. Our cyber coach will let me know your contact number. I will definitely contact you to arrange with you a one-to-one private coaching session, okay. And you can have a session over coffee or whatever, and at the expense of my time. Why? Why do I want to do that? It's because I really want to help every individual to understand the specific topic they learn. Once they understand this, we're going to be very useful. Because in my training career for many years, I realized that a lot of people learn already and they never practice. So I think it's why they never practice is because they don't fully understand what they learn. So I want to use my own time to help every individual to truly understand what they are trying to learn. Like the questions all being asked, that's where during this kind of private coaching session, we can discuss over it and you can have clearer clarity over the questions. Okay. Now, you'll see that a lot of times, all my courses I've been running online ever since COVID lockdown started until now. It has been online. Another reason for private coaching is that so that I can meet physically. I really miss the time where I can speak to participants and then chit-chat with every participant over time. That's why having private coaching session allows me to also understand every individual who attended my course or workshop. And this year, Cyber Code, we have also decided that it's also a good time to start with the in-person preview or in-person meetup. I've been doing this online. Yes, it's very comfortable, but I still enjoy seeing people talking to me, raise hand and ask me questions. So this year, for the first time over the past 3 years, that we are going to organize a in-person preview session. Now, this preview session is very special. Okay, why? Because I'm going to let you guys play a game. Last year, I created a simple card game with intention to help every individual understand how to manage the wealth? What is the right principle in terms of managing wealth? So in this in-person session, you're going to enjoy the game exclusively for you guys, okay? Because not a lot of people have touched this game. Because I invented this game, I tried out as a Christian. I went to mission trip. I want to help out people who are not so well off to understand what is the proper way of managing wealth. It has been introduced in Thailand, and also in Singapore. I also reached out to some of the low-income youth. I taught them. A lot of them really, really love it. And I want to use this session, in this physical session, to also introduce to your the real meaning or objective behind investing in the stock market. Why do we need to do so? But the main foundation is that how people get wealthier and wealthier over time. Okay, so it's a game session, and also to learn the concept of game and how to improve upon that to improve your investment objective itself. It's going to happen in 21st November, like what Andy has announced earlier on, at 7:30 p.m. to 9:30 p.m. And you'll be on Tuesday night. Okay, you'll be on Tuesday night. So we have rented a place in Lifelong Learning Institute, okay, a training room. And because we rent a place, the seats are limited, okay? The seats are limited. So please secure a seat. If it's full, then I'm sorry. And another incentive for you to secure a seat is that we also provide some refreshment. Okay, we'll have refreshment starting at 6:30 p.m. And I also want to encourage you that after hearing today, also do bring a friend, especially those who have attended my Making Investment course. A lot of your feedback that, hey, Jay, really benefit a lot. Thank you. And I think the best way is to share what you have learned with a friend and bring a friend together to enjoy this physical in-person session, which I really hope that it can happen for the past 3 years. Now, I think it's really a good time to introduce this in-person preview to you guys. Okay, so QR code is at the top left-hand corner, and do spend some time to scan. Okay, but of course, more importantly, I also want to encourage everyone to consider signing up for this 2-hour workshop happening at the end of this year, 7th December, 14th December, and 21st December, respectively. I shared the details of what you're going to learn in the course. And the small fee of $199 definitely is going to help you to improve your understanding on making wise investment decisions. And Andy is going to spend some time to teach you how to scan and sign up for this course. And if you have any questions, please feel free to ask Andy. And I will be passing the mic to Andy. But before I pass the time to Andy, I have some questions. Will there be course notes given before the workshop? Okay, this 2-hour workshop, because it's online based, this time round, okay, I will be distributing as a PDF format. Like the intrinsic value, I will distribute a PDF that, and also I'll attach an Excel spreadsheet for you all to have easy calculation intrinsic value of company. All these are included inside. Then for the technical indicators, each technical indicators will have their own scoring form, but it's a manual one. It's not going to be a Excel spreadsheet form. Okay, so hands out will be in PDF format. Okay, for you, for your own personal consumption. Okay. So thank you for a question. Let me see any question. No more. Okay, so for any other further administrative questions, you can ask Andy. And before I pass the time to Andy, I want to thank everyone for spending 1.5 hours and also asking me questions. Okay, very often I enjoy my session when questions are being asked. If I just talk, it's like I'm talking to my computer screen all the time. Okay, so thank you for your time, and I hope that whatever I share today it's going to help you to understand why share prices move and how you can benefit for understanding it. And more importantly, what I want to urge everyone is that do learn how to make use of such information in order to make the investment work for you. Okay, one question, Jay, how long will the MIW course cover, and what and how long? MIW course is going to be over a span of 3 weeks. Okay, 3 weeks on 3 Saturdays, but I don't have time yet. I don't have the confirmed dates yet, but it's going to be in the month of January 2024. Okay, if you want more details about making investment course, you see on this screen, bottom right corner, there's a QR code. Okay, you can scan on this QR code and then it will show the topics you will learn in this making investment course. Okay, so with this, I thank you everyone for all the questions and also the time being with me for the past 1.5 hours. And what I really do certainly hope to see you in my class, 2-hour class for this end of this year. And if you want to really see me in person, do sign up for the in-person workshop. Okay, in-person workshop at the Lifelong Learning Institute. Okay, so Andy has posted in the webinar chat already all the details over there. So with that, thank you for your time, and I'll pass the time to Andy. Andy, please.
Hi, yes, can see me and hear me well, Jay?
Yes, yes.
Okay,
Andy.
cool. Thank you very much, Jay. Wow, thank you very much for those who stay on for the 1 hour plus session. Now, indeed, very exciting, right? I think this is the only session, the only course you can actually join in 2 different hybrid system. Just like you buy a car now, a car was called hybrid, right? Similarly, our making investment course, of course, right? The MIW course, I think someone asking about what's the duration like? Not to worry, right? Because although Jay just mentioned, although we don't have the final date, but I assure you, that will be in the month of January of 2024, just right before the Chinese New Year, because next year the Chinese New Year is on the February or 2nd week, right? Now, again, importantly, like what Jay just mentioned, for today's session is more geared towards, we're talking about the 2-hour financial workshop. Now, also, the other thing in the beginning of the opening speech, I will just share with all of you here, where we do have a face-to-face webinar session right now. That is very interesting. Now, I think, well, this is something that I have also been asked. Okay, now you see in Singapore, I think we all aware about this the COVID time. Basically, we can't go out here and there, right? Therefore, you see our course is all mainly 90% is conduct via the Zoom training session, which is via the Zoom session, just like you joined today right now, right? Now, the good thing is like there are still a small minority people asking that, hey, I think would like to see in person, would like to sit in to have a more, intact, to be contact with the speaker and the trainer. And that's the reason now Jay taking out his personal time to work out this session on the 21st of November. Now, let me just do my share screen first, right? Okay. So, yeah, let me just do my share screen first, Okay. So this is the moment. Now, this is the moment that I think, let me just ensure all of you can see my screen. Okay, excellent. Yes. Okay, this is the moment that I think I would like to just encourage for all of you here. Now, if you do have friends, right, you do have buddies, we're still around, maybe trading or investment together with you, bring them along to join in for this session. Like I say, this session is a very, very interactive. It's it's a leisure session because you can see there's a games involved, that you can learn. You can learn as well. You also can get prizes, right? And the things that also we just mentioned earlier on, we will provide you the refreshment for this 2-hour session that we schedule on this date of the 21st of November, right? So this is the date and the time, right, which is on happening on, which is about 3 weeks from now, right? On the 21st November, on the Tuesday evening, 7:30 to 9:30 p.m. So for the registration, please do scan the QR code, right? So please also bring along your friend because it's based on the first come, first basis. Because like what Jay just mentioned, we book a room, right? That room basically is you can sit in not more than 30 packs, right? So I presume that definitely would be more than 30 packs people joining. So today is our first evening webinar. We are promoting this physical face-to-face webinar session. Are you wealthy, right? With this, at the same time, can join in to learn the skill, right? And to also in contact with JJ, our trainer, right? Now, also, of course, like what we mentioned earlier on, but more importantly is we're also looking into the other portion, which is the courses. So someone asking earlier on, I think Mr. Chai was asking about how about the duration of the class, right? So I think Jay did mention to all of you here. Now, I think in the traditional way of our class of making investment work course, which is span of 3 weeks. After 3 weeks, as you can see here, it's not all the 3 weeks as in 12 weeks, actually as in all consecutively. So normally our class setting, our course setting, it works in such a way, we break it into part 1, part 2, and part 3. So the session, I didn't provide a date because we have not finalized a date as what Jay just mentioned, but we confirmed it in the month of January 2024. So part 1 will be 2 weekday evening session. So these 2 weekday evening, most of the time will be Monday evening and Thursday evening, okay? And the time going to start from 6:15 p.m. to 10:15 p.m. That is for part 1. For part 2, it will be also 2 evening, weekday evening, okay? Monday evening and Thursday evening. And timing also going to start from 6:15 p.m. and end around 10:15 p.m. And then the part 3, which is the full day, that will be scheduled on one full Saturday, and timing going to start from 9 a.m. and end around 6 p.m. in the evening. So these are the setting of the class. These are the setting of the class for making investment work course. We'll break it into 3 parts. So earlier on, I think the participant, Mr. Chai, were asking, so although we don't have a date as yet, please scan in. Please scan the QR code, or if not, just mouse over to the chat. I think I sent 2 separate hyperlink for you to register. So you just select for making investment MIW, the highlight in yellow one. You can just click on the link to do the registration. So you need not to make any payment, right? Because as I said, we don't have the course date as yet. So at least we will capture your personal details when the date of the courses has been finalized, and then we will notify you via email or even phone call, right? And then there's a time you start to make course fee payment after the IBF subsidy, okay? So bear in mind, this fee currently is still based on up to 31st December 2023, because as we all knew, starting from 1st Jan 2024, there's one thing change, which is the goods and service tax, right? Our GST going to increase to 9%. So this is all based on 8%. So definitely the price will be different, right? I mean, at the same time, also want to highlight to all, and hopefully the IBF subsidy will stay put at 70% and 50%. So this is basically if you are a citizen below 40 years old, or you're a permanent resident below, then you'll be eligible under the IBF funding support of 50%, and then the remaining 50% with GST. This is the fee as of today till 31st of December 2023. Because as I said, next year January will be next year new year, right? Then the goods and service tax, the GST will be different, will be 9%. Okay. Now, if you're a citizen below above 40 years old, then you'll be eligible under the IBF funding support of 70%. And then at the end of the day, you need to pay the remaining 30% with GST, which is based on 8% GST, will be $684. So similarly, you can use Key Future Credit. You also can use your NTUC UTAP. Very interesting, right? Because there are a lot of people in the market, I think especially Singapore citizen, you have your Skill Future Credit, you have not started to use it. You using the Skill Future Credit as well, right? So this is for the making investment work course, right? Now, importantly, we mentioned for today's session, for this today evening session, we are going to emphasize on the three unique session of our financial workshop, a modular class, right? So the first modular class, the course title will be finding the intrinsic value of the company, right? So as you can see here, personal coaching will be included, right? So let's say, for instance, some people might ask, Andy, what if I attend all the 3, I enroll and make payment for all the 3 unique courses? So will I be enjoying 3 sessions? No, if you participate all the 3 sessions, you'll be still eligible for 1 personal coaching session, right? Because as you can see, the date is run uniquely, right? So it's a different date. So it is possible for you to join in all the 3 sessions of the 3 different workshop title, right? So on the 7th of December, I think all the sessions scheduled on Thursday evening. So the 7th December session will be the finding the intrinsic value of the company, right? So if you want to sign up the course, scan the QR code, or if not, you just mouse over to the chat. I think there's a hyperlink has been sent there. Now, for those who join via the Facebook Live, right? So my colleague back end, we also post I think 2 different links, the financial workshop, the 2-hour session. There's a link there, and as well as the making investment work course, you also click the link as well over in the comments column, right? So the second title is called Riding the Ichikubuku Crowd Indicator. So this will be scheduled on the 14th December and then Thursday evening, 7:30 to 9:30 p.m. And then the last class is on the 21st December on the Thursday as well. And then timing is 7:30 to 9:30. So all the session, we're going to start from 7:30 p.m. and end around 9:30 p.m. And then the title for the 21st December will be using the MACD to spot market turning points, right? So all these 3 unique sessions you can register. So at the same time, you also can register MIW course. And at the same time, you also can register the physical training session, the physical workshop session, which you just mentioned, the one we schedule on the 21st of November. That will be for the you can bring along your friends, right? But make sure we will only capture up to maximum packs of 30 participants, because the room size that we so-called book from the Lifelong Learning Institute is actually it can capture together with the trainer, together with our facilitator, CyberCode, the trainer, as well as the participant is up to maximum 30 packs. So please do share with your friend, bring along, do share with your friend the link. Of course, when the session ends later, I'm going to also send out the thank you email with the link, so you also can help to forward over the email and the link over to your friend, so as for your friend to join in for either all the 3 different courses, the 2-hour workshop, the making investment work course, which is you can register first, right? And then we will inform you the course date when it's finalized. And then last but not least is the face-to-face workshop session, which is scheduled on the November. So please take this chance to scan in the QR code and also to go through this session. So let me just go through with all you how to do the payment. Let's say you want to make payment, you want to go through to join in for this, out of the 3 sessions, you will join for this course, right? So earlier on, I did mention, I sent in fact, this is the chat I sent to everyone, right? Okay, so we do have a 2 different course link. The link has been sent. So if you decided to join in any of the 3 workshop, you just click on this link. Once you click on this link, right? Once you click on this link already, so you were able to see that. Let me just pull this over here. And then it will come to this page. There's a 2-hour finance workshop, right? And then you just browse over. Okay, you're able to see 3 different titles: finding the intrinsic value of the company, writing Ichikuku crowd indicator using MACD to spot market turning points. So let's say if you decided to join the intrinsic value. So what you need to do is see underneath there's a sign up now. What happened for the writing Ichikuku crowd indicator as well as the using MACD to spot market turning points. You just so let's say you want to join in the first intrinsic value. You just click on sign up, and then you link to a page. You link to the course registration page. So this is all through online. So you need to register, to provide all your details in online as well as the payment as well. So when I click on that, you see the title, Intrinsic Value Workshop Registration Form. And then under the selection of workshop date, click on that. It will automatically only appear one course date based on 7th December. Select on that. And then there's a detailed applicant. Please fill it up as per required. Fill it all the way down. And then right below, of course, you can see there's a course fee. The cost fee is $199 before the GST. So with the 8% GST will come out to 214.92. If I'm not wrong, it should be 214.92, right? And then you see there are total 3 payment modes. We have Visa, Master, we have PayNow, we have PayLah. Let's say you want to use Visa, you just select Visa and then you click here. Then you come to a page, right? You come to a next page. Okay, then you appear with the payment, the payment page, and then you click on the cost, right? The drop down list, you're going to select. You're going to register the first intrinsic value you select, right? And then you key in 214.92 because you have to pay with the GST. The order you leave it blank, and then on the right side you fill up all the details. Just like what you make payment for the online payment, and then you click next. The next page you give you a selection Visa card or MasterCard. You just select either one, and then you key in your card details, and then you submit. Once you submit, the Visa card company will send you OTP, one-time password. Once you key in the OTP, and then you will straight away debit from your Visa card, and then the payment acknowledgement sent to you. So same thing, you want to register another course, let's say you want to register even making investment work course, you can do that as well. Okay, of course, making investment, I'll go through on that in a short while later. I'll show you the other course, the other 2 title. Let's say you want to register, the other one is writing Ichikuku Club. You automatically appear the date. right? And then the fee is the same, 214.92. And then on the right side, under the billing information, you key in all the detail, and then similarly, you click next, and then you need to key in, select the Visa card, MasterCard payment. And then of course, you want to also register the last class, which is using the MACD indicator to spot a market turning point. There's on the 21st December, same cost value of 214.92, and then you key on the right side, you fill up all the details, right? So all this information is through online session. So the training note will be online as well, right? Okay, let's say take for instance, you want to register, say, Andy, I want to register the making investment work course. Although you don't have the date, but I want to register, as you mentioned, maybe I just mentioned that you need not make payment, but you want to register, right? You can do that. You just click on the link under making investment work course. Okay, then you click on the link already, right? And then you'll come to this page. And then of the same thing, you got to key in your personal particulars because we need to capture your personal details like email, your contact number, right? And these are the very valid information you need to contact you when the course date has been finalized. So you see MIW course registration form 2023. So currently you see there's no match file because we don't have date yet. So you need not to select any of the course date. So over here, there's a detail applicant. So you got to fill up. So over here, you can see you have to fill up all those required field, and then have to select the self-paying individual and make the cost fee payment. Of course, you do make payment right now because you're doing the cost date is there. So you can see the full cost fee before GST is 1,008. With the 8% GST is 1,944. Sorry, 1,944. So the GST is 144. So next year will be additional maybe $12 to $15 more now because it's increased to 9%, right? Okay. So if you're a citizen below 40 years old or PR for all ages, so this is your IBF subsidy, and then the cost fee payable will be this fee. Of course, your fee will be slightly more, maybe another $12 to $15 more because 9% GST. Now, if you're a citizen age 40 years and above, then you'll be eligible under enhanced funds and support of 70%. Then your cost fee payable will be this. But of course, like I said, you will be paid slightly more because there's additional 1% more the GST. Now over here, you see there are total 4 payment selection. For making investment work course, we provide another payment type called Skill Future Credit because you can use Skill Future Credit to make payment. So let's say you've decided using Skill Future, you select Skill Future, and then you click here. So once I click here already, you route to the page of the Skill Future landing page, right? Because our making investment work course is fall under the Skill Future accreditation. So you can see our course, making investment work course appear here. So under this page, right, there's the e-services. I click on that. Once I click the e-services, then you see there's appear of 5 different boxes. So I click on the first check and claim Skill Future credit, and immediately it will pop up a SingPass tab. So before you click on the SingPass tab, make sure that you have a smartphone beside you and you launch your SingPass app. At the same time, you click on the SingPass tab, and then you generate the SingPass code, and then you go to scan the SingPass code in all the government portal, right? So you sign is all through Skill Future signing in, right? So in sign in, so it will redirect you to the page of the Skill Future page, and then at the same time, make sure you get ready with your smartphone to scan the Skill Future page. Right? So yes, correct. You will appear the code, and then I need to sign in. So when I sign in, right, then okay, so I can use my Face ID to be faster. So just give another 10 to 30 seconds. You route to my personal page of the Skill Future page, right? So you can see my name appear here, right? I have a credit balance of 1,005. So this course itself, the good news is after the IBF subsidy, the remaining 30% with GST, the remaining 50% with GST, you can use Skill Future credit to pay for it. So you need not to come out any single cent from your bank or from your wallet. So if you are citizen, because Skill Future credit is only for local citizen, right? So you can use it to fund to pay for it. You see, my name is here. I have my credit balance. So also, I want to take this chance to share with all of you here. The Skill Future credit also comes with the expiry date. So beside the dollar signs of 1,005, there is a forward symbol. I click on the forward symbol. You have jot down all the Skill Future credit that I have, and you show you which is the dollar going to expire. So you see, of the total three pieces of $500, two of the $500 going to expire 2025, 31st, right? You see, so it's very soon. So you have to use it. So if you do have friends who have SkillsFuture credit, have not started to use it, it's time for you to share with them, right? To start to use the SkillsFuture credit. Okay, but of course, it's only for making investment work course. So if you want to join for the modular class, the 2-hour modular workshop, you need to pay by your personal money, right? Because that is actually for personal improvement for yourself. So this making investment work course, you can use it to do a submit, right? What you need to do, you just click on submit a claim. So once you click on submit a claim, and then you see underneath there's a select a course to submit a claim, and then I select, and then I key in the manually key in the name. Okay, so I need to do the submission investment, right? Investment, right? It straight away appear already. So I select that, I click search. So once I click search already, it will, in a short while, you can see our course with the course ID, it will appear. So it show you that our course is already accredited in the SkillsFuture portal. So within the rectangle box, there is a select tab. I click on the select tab. And then you move on to another page. So I need to key in the course start date. Of course, right now, as I said, we couldn't key the date because we have not finalized the course date yet. So therefore, SkillsFuture credit, there's a requirement you've got to have the course date in order for you to do the submission for payment. So at least I showcase to all of you here that our course, making investment course, is fall under SkillsFuture credit. Let's say, take for instance, if I just assume, let's say the class, example, let's say my class is going to start on 13, assume, right? I click next. Then it will show you, in the next file later, it will show you a tab, right? On the left side, you show here making investment cost, and the right side, you show you the detail. That is actually when you got the cost date. So now I do the assumption, right? And then the amount of credit to claim, fee payable by you, and also to upload the supporting document. So earlier on, we did mention, right? If you are so-called, let me just show it to you. Okay, so if you are under this citizen below 40 years old, this is the cost fee payable 1044. Of course, next year will be slightly higher because increase more percent the GST. So if you are citizen below 40 years old, above 40 years old, this is a fee payable. Let's say I assume that actually is still based on 8%, I'm above 40. So I key in 684, all right, on the both sides. And then you also got to upload the supporting document. So where is the supporting document? The supporting document will be the cost registration form. Oh, okay. So it will be this form. Okay, sorry. It will be the form that earlier on I just showed to you, the registration. I will click on the making investment cost. This is the form I'm talking about. So you're going to submit. You're going to submit the detail and fill up all the so as for us to capture all your personal particulars. Okay, so this is the form, MIW cost registration form. So normally when the date is finalized, you can see, you can select the date, because now the dates have not been finalized, therefore we still show you no match found, right? So you have to fill up all the detail, all this requirement, and then you select self-paying participant. You move all the way down, you select SkillsFuture, and then you click on the submit tab. So once you click on submit tab, back-end our system, back-end our IT system will send you a cost registration form. So that form, the PDF form, will be served as a supporting document. So when you have supporting document, you just click browse, and then let's say you save it as MIW file, right? MIW, right? Let's say this is the file that you have saved, okay? And then you click open, and then it will automatically, in the next 10 to or 20 seconds, you upload the file here. Then you can do the submission already. Okay, so this is for the SkillsFuture credit submission for MIW class, making investment work course. For those who join for a 2-hour session, you can straight away make payment using PayNow, PayLah, or online payment. Okay, so similarly, just do a simulation to showcase to you, right? So you see, let's say the file has been uploaded already. I can click on review to make sure all the submission are key in order, right? Especially your supporting document to ensure it's a correct file. And then I have to check on the term and condition, agree, then click submit. So once you click submit, the next page will appear with the pending for approval. When you see a header pending for approval, that means you have successfully submitted the SkillsFuture credit payment, and then your job is done. Okay, when the class starts, they will debit from your SkillsFuture account. Okay, so this is for SkillsFuture credit. Okay, so let me just sign up first, and then to at the same time lock out as well, because this is my personal future credit account. I have to ensure I have to sign out first. Okay, then I'll go through with the other payment types, so at least all of you can get to know. Let's say, for instance, you only use up your future credit